Hello and welcome back to Coinscrum's Meet the Founders series. I am thrilled to be joined today by Roy Bernhard, CEO, Chief Visionary and co-founder at Fabriik. Welcome, Roy.
Thank you, Paul. Thanks for having me.
So before we dive in and learn more about the Fabriik trading ecosystem, I guess is one way to describe it, and find out more about that product and everything you're developing there. We like to find out what our founders were doing before they entered the world of crypto. So maybe if you can just start telling us a little bit about your background and your journey into the blockchain space.
Sure. Happy to. My background comes from engineering and computer science. More formally, I've then had sort of a wonderful opportunity to explore different types of businesses, mainly as the CTO and head of technology in a lot of different industries. Over the course of my career, I've had a wonderful opportunity to work in the online iGaming space, in the online video gaming space, creating MMORPGs for kids and fun stuff like that. And funny enough, more recently, I've had the opportunity to build a quant fund, and I've spent the better part of the past 10 years actually starting and building a law firm of all things. But I think there's this trend where people with technical backgrounds have been able to migrate into other executive leadership roles and utilize that engineering background as a way to change things and do things differently. And then I guess coming up to more closer to present day, I had the privilege and opportunity to attend Harvard for continuing education, and then about a year and a half ago, maybe close to 2 years ago, I had an older friend tap me on the shoulder and open up the door, or I should say, kick open the door to digital assets and cryptocurrency, and it's been a hell of a ride since then.
Yeah, the fabled rabbit hole that everyone falls down and finds it tough to get out of.
Yeah.
And I guess having a legal background and a technology background is a healthy mix in this space as well.
It's been good, especially now with this roller coaster ride of regulatory, growth and concerns. Yeah.
Yeah, well, we're talk about the ecosystem and the product that you're developing at Fabriik. And I guess if you look back a few years for the guys that came in and set up the first exchanges, they were very much purely from technology backgrounds, and they probably could have done with some of that legal perspective. I guess it wasn't so critical early on, but more recently with having new regulations being applied and coming to the fore, I think it's critical that anyone coming in now understands both sides of the fence, so to speak. So, so how did Fabriik come about? How did you form the team? Who else is involved in your founding team?
Sure. So we Fabriik actually started, as I mentioned, with a friend, an old colleague, tapping me on the shoulder, and he actually tapped me on the shoulder for an idea that he had in relation to cryptocurrency arbitrage. So he had been doing a lot of work with different businesses in the digital asset space and found that in moving capital back and forth, there were lots of discrepancies between the pricing on different exchanges. And so he knew that I had spent some time building a quant-based fund in the past and had understood the technology. So we got together and basically built out a cryptocurrency hedge fund, a digital asset hedge fund, and launched it in the Cayman Islands. And it gave us a wonderful experience, especially for me, in understanding how to connect to different exchanges, understand what they were doing, understand what the marketplace was. So that opened the door to what Fabriik could be. We actually started it off as the Bayesian group, and it was the quant fund was actually based on the Bayesian inference principle, and we used that in a really unique way. We then found out that the technology that we developed, we called it Project Inference, was actually much more useful than just acting as a backend to a hedge fund. It was much more useful to move into a lot of the markets businesses and financial services businesses that the industry required. So we took all that technology and we refactored it slightly, and then we were able to use it as the core platform for market making, liquidity provision, and OTC services, fully automated OTC services. And that allowed us to just springboard from there and grow. And I guess I can take another second to pull back and say, once we launched that markets business, we sort of stopped and stepped back, and we said, well, what do we actually want to do with this? We have a wonderful opportunity to make something grow, but it's not just about revenue. We've both had successful careers. We wanted to do something that was really inspiring and exciting for us, and this space really allowed for it. So we took a step back and we said, you know what, we can actually change the world. I know it's cheesy to say that sometimes, but it's rare to be in a place and time and in an industry and with the tools to do something that is changing, sort of globally changing. And so we actually pulled back and said, okay, you know what, with Fabriik, we can take this technology and the work that we've done and create a larger ecosystem. And that larger ecosystem would allow us to really deliver and change a lot of people's lives. And we came up with the term reimagine prosperity. And we use that as a tenet for turning around and saying, how do we create a financial services ecosystem that allows not just somebody who's high net worth or ultra high net worth or an institution, but somebody who's sitting, in a village in Africa or on a rickshaw or somewhere, even in North America or in the UK or EU, but makes $10, $25, even $1,000 a week or a month. How do we take one of those people and help them to actually do things?
Well, I think coming from that starting point, learning from your own experiences as being a market participant, and then kind of starting to understand what market participants need, especially in this new industry, and especially knowing that it's often, especially when new technologies come about, that it's the second wave that often gets it right. I mean, look, we've seen some of the first wave make great strides in recent years, and with the Coinbase listing a couple of weeks ago, then we can't say that they've done things wrong. But I guess if you do look back to the early days of Coinbase, it's they've definitely evolved over the time from the early days of just being kind of a custodial wallet platform now to being full exchange services. But with that benefit of some level of hindsight and having looked across the industry and learned some lessons from maybe some mistakes that have been made, and having the luxury of starting from scratch, can we move on and just hear about the product? What are the kind of core components that you decided needed to be addressed from the ground up, and how you've gone about addressing those?
Sure. So I'll actually start from the top to the bottom because it gives a sense of why, and then we fill in the gaps. So at the top of, we'll say, our pyramid is the Fabriik Smart Wallet. And the Fabriik Smart Wallet, the premise is based on simplicity and accessibility. We feel that the next battleground for the digital asset space and the blockchain space, and it's been for a while, but really the next major battleground is going to be about accessibility, is giving people the ability to use all that function and power, but feel safe, protected, and be able to do it in a super simple and easy way. So the Smart Wallet is the manifestation of that. But in order for the Smart Wallet to truly deliver on components like open finance, open banking, integrating different institutions like lending and borrowing and trading and holding, in order for it to deliver on those in a very simple way, it needs to be powered by a very complex and interconnected backend. And that backend consists of three core products for us, and that is our qualified custodian product, which is both digital and non-digital assets. We don't believe that a proper custodian, or at least a product of the future, should only focus on digital assets, but physical assets, whether that's real estate or collectibles, you name it. So that's the custodian product. And then we have the Fabriik Markets business, which is the OTC, again, market making and wholesale liquidity, which gives you exposure and access to many different liquid markets. And then last but not least is the exchange. And the exchange allows for the more traditional trading. Our exchange, the licenses and the work that we've been doing will allow for both spot and derivative trading, but we will also push into tokenized securities and tokenized real world assets, tokenized digital assets. All of those will create wonderful pairs. And then beneath that, we have our Fabriik Digital Objects offering. And the Fabriik Digital Objects is our tokenization platform that we built, and we created this digital platform, and it is the glue and we'll say the rails that tie all of those pieces together. And the magic of tying those together allows somebody at the wallet level to be able to take, for example, they should be able to see their Fortnite skins in the value of them in their wallet as a tile, and then drag that tile and drop it onto their credit card and pay off $200 worth on their credit card, and not worry about all the complicated stuff that happens in the background on the exchange through the markets business or with the custodian. All of that should happen seamlessly so that somebody can just use it and benefit from the technology without feeling like they're having to figure out how to code and have 14 different wallets and do all these crazy things.
And how do you, I tend to agree, that in terms of where we're heading, everyone who's been around this space for a long time and knows that UX has been a real challenge. It's definitely improving. I think, especially what we're seeing in the NFT space, there's a real focus there on opening up adoption. It's ideal for adoption by the masses, but, these things still have, or some of them have significant value as well. So, protecting your private keys is still critical. A wallet is a wallet, whatever it's holding. What are you looking at there in terms of, the other area around that, in terms of that safety element, security element, is getting the balance between, self-custody, third-party custody, and recovery as well. And having a balance between all three of those for the masses really to take, this asset class on board.
100%. And I think this is where our approach to things a lot of the times tend to be hybrid approaches. So we don't, a lot of people advocate solely for pure self-custodial types of wallets or infrastructure, and others will push all the way on the other end. We think that there's a balance between the two. We think that there's an opportunity for people to have control. But look, the reality is that the reason why banks existed in the first place was because, people had gold or assets, and they turned around and said, I don't have the resources to actually keep all of these things safe. I need some help. Mm-hmm. And we feel the same philosophy. We want to help people to custody assets. We believe that's the reason why we have Fabriik qualified custody as part of our offerings. And some people, like our wallets, allow for people to turn around and say, yes, I want to custody these assets myself. I'm going to hold the keys. I'm going to hold the all the details to make sure that I can unlock and access them. I don't want to rely on a third party. Others who have a significant amount of assets, and what we've seen in this industry is that almost everyone, unless you really are an extremist, and with all due respect, that's fine, but most people want that support. So our qualified custodian allows us to both custody assets in a regulated and secure manner, properly licensed and checked on a regular basis. It allows us to apply insurance to it as well, so that you can have your assets stored and insured. But we still are going to be implementing, and we have lots of technical tools that allow people to really be in control of their assets. And also, as a final point on security, we don't operate where I have the keys to the kingdom or my partner has the keys to the kingdom. It doesn't work that way. We don't think that that's the safe and right way to do it. In any properly operated and governed business, you're going to have multiple pieces in place in order to ensure that there are checks and balances, and people can rely on that. And that's what people want ultimately, to feel safe, that nobody can run away with their assets. Yeah,
no, I absolutely agree with you there. So just coming back to your choice of some of the technology that you decided to build on, maybe some people that follow this space closely might be a controversial choice. You've been building, or when we spoke before, you looked across the board, you assessed different networks, and you've been building some of your technology on top of the Bitcoin SV network. Can you talk about that decision and what benefits you think that brings?
Sure. So, I guess one thing I'll start off for clarity, our platform and all of our services and offering, for example, the exchange, the custodian, the markets business, are all digital asset agnostic. We support all the assets that make sense, that are safe and secure. So we start there. On the back end, we right from day one of the first things we did was we sat down, myself and a few quants, and we reviewed dozens of different blockchain technologies because we felt very strongly that blockchain was the right way to go. We did look at more traditional things like databases and other things as well, just to give us a sanity check, because we didn't want to just drink Kool-Aid because, right? So we agreed that the future was on blockchain. And then from there, reviewing different blockchains, looking at what their capabilities were at that time and what their capabilities could be in the future, it made a lot of sense to move with BSV. We agree on the idea of scalability, cost efficiency, and the ability for speed of transactions. And those three elements were handled quite elegantly on the Bitcoin SV blockchain. And we know that there was some, and there still is some politics that surround BSV, but in all honesty, we don't care. It would be silly for us to not use open source, publicly available, decentralized technology, if it's the best thing to use, just because there's some political issues that other people are having. It's not, there's no one person that can destroy this blockchain. It doesn't work that way. So we felt very strongly, and we feel that it's going to give us a massive edge, especially because, for example, our tokenization platform is built on BSV, and people can tokenize and trade things at a fraction of a cost and at much greater speed than any other blockchain platform out there. So it's better for everyone. And we think that the end consumer will only see it as plumbing anyways. Nobody asks, we'll say Lloyd's, if they're using a Microsoft or SQL Server for transacting. They don't care. Is it fast? Is it cheap? Is it effective?
Yeah, no, been around long enough, things became a little bit too tribal. And as you say, again, this, the next phase we're moving into is about, can we get mass adoption, rather than it still being a quite very interesting but still quite niche industry. And it's really only going to last and stay around if there is mass adoption. And like everything, who cares at the end of the day? Ultimately, this thing works best when people don't know, and it's doing what it's purported to do under the hood, and that's what they want. And they want the experience. I think that is all. The user experience is really ultimately the be all and end all at the end of the day, especially for a mass retail market. So no, that was very interesting to hear. And what about where are you guys domiciled?
So we're headquartered actually in the UK, in London. That's the parent, and we have, I guess, subsidiaries that are wholly owned all around the world. So we're, one of our fun facts is that we're a pandemic-built company, as sort of bittersweet as that may sound. We started off 2020 with about 6 people. We're now at about 152 people in 9 different regions around the world. We are a diverse, multicultural organization. Lots of different languages. It's actually amazing. So we consider ourselves a company of the world, and I couldn't be prouder of that fact.
And how are you finding it then from the regulatory perspective? It's a fast moving space on the regulatory side as well, and obviously domiciled in the UK. We've recently had Brexit as well, but in the EU they're putting together a solid framework for digital assets as well. How do you see things emerging there? Is it becoming more helpful? Are the regulators becoming more helpful, or is it still kind of a huge challenge to overcome?
No, I think that it's becoming more helpful. And it's funny because some people may speak to the fact that regulators are putting up more barriers in certain areas, but we see that as a good thing from the perspective of they're not barriers so much as they are guideposts. One of the biggest things that's been lacking on the regulatory side is there have been no lines paved on the road. And so you don't know if in 1 kilometer from now you're en route to go head into a head-on collision. So they're starting to paint lines on the road, and that allows us, especially a company like ours that is regulatory first in our thought process, we're not cowboys. We're not trying to be cowboys. We are leaning into our relationships with regulators, regulatory bodies, governments, lobbying groups. We believe very strongly in the power of what we can do. And so through that open communication and through clarity, things are getting better and better. I think that what we're going to see is a bit of an initial knee-jerk reaction where things are tightening up a little bit, and then they'll start loosening up again. So there were no lines painted on the road, and now a lot of governments and regulators are furiously trying to pave, 100 different lines on the road and put up so many different signs. But then at some point they'll pull back and say, okay, wait a minute, you can travel at 100 or 150 on this highway. It's safe to do that. Mm-hmm. And so it's that ebb and flow. And so let's just put it at lawyers. A lot of external counsel is enjoying this ride, maybe more than us, but we're happy to be a part of it.
Yeah, I guess so. They always win, the lawyers. So where are you on your roadmap? You said you built that large team in a relatively short space of time. Where are you in terms of funding to fund that growth? And who are your early adopters, and what's the typical profile of your client, and who are you going for in the market?
Sure. So we are as an organization, we've been able to build and release several different products. Specifically, as I mentioned, the Fabriik Markets product is up and running, the OTC desk, the market making product, and wholesale liquidity. So those have been up and running for a little while now. We're ramping up with our sales force and continuing to push out and work with partners on that. Our Fabriik Qualified Custodian just launched, I would say, a little less than a month ago. And we've started onboarding clients to that. Our exchange is in what we call a dress rehearsal in-house. So it's fully operating. It's just operating internally. Once we vet that, we're going to be launching it to all of the employees inside of our organization for a couple of weeks so that we can make sure that everybody's happy. And the beauty of being a, we'll say, multi-region organization gives us the ability to understand how it works for different people around the world. And then in about a month from now, we hope to be able to push that out to the general public. Our focus for the exchange is we're going to be launching it in the US and the EU. We're initially starting off in California as a marketplace. We believe in concentrating our efforts in one specific location. It makes it easier in a lot of different ways. And then we've applied for what's called an MTF license in the EU, which will allow us to do a lot of wonderful things. And as soon as that license comes in, we'll be able to push out and launch into the EU. So hopefully by the end of the year, we'll be fully operating and running across all of the US and all of the EU with the exchange product, as well as the custodian and others. And then the wallet, we actually went and acquired Money Button, which was a leading wallet in the BSV ecosystem. And by bringing the wallet on board, and actually the people that were involved with that, very, very intelligent people that we were able to bring in, they came in and they helped to shift our wallet and move it down a path. So that's already out there. We have a significant user base in the wallet, and we've, on the tokenization side, we've already launched and released our tokenization platform. There are now thousands of tokens that have been minted and issued in the platform. The tokens are visible in the wallet and tradable across anybody who has one of the Fabriik Money Button wallets. And last but not least, we've seen some really cool things. There have been 2 developers that we know of that actually have built full NFT marketplaces actually on their own, just using the API without even having to talk to us. They went and they built these marketplaces. So a lot of really exciting things going on, and we see that progressing more and more. And the reason why we're able to do that, as you mentioned, with regards to financing, we went out and we raised a significant amount of capital on day one, almost, we'll say within the first 6 to 9 months of operating the business. And we did that on purpose. We felt that a lot of the core businesses that we have and the vision for the things that will take 2 or 3 years to really gain adoption and traction, that if we were to try and do this drip, drip, drip and go slow, it would fizzle out. Like it's a red ocean in a lot of ways. There's lots of competition. Some of the incumbents are incredibly well funded. So we felt that what we needed to do right up front was get a significant amount of capital and hit this as an enterprise organization, which is why we ramped up and hired so many people very quickly, and why we made that ecosystem play. And you need to make an ecosystem play, by the way, because you have issues like, we were using Curve as one of our providers, and Curve is a fantastic technology platform, but PayPal acquired Curve recently. And so, we got a notice very quickly after that saying, we're going in-house into PayPal, so we can't provide you with services anymore. Mm-hmm. So you try and build an organization with external partners that are pivoting themselves and then cutting you off. It doesn't work. So, so that was able to come together, and
so what about, so it sounds like, I guess ecosystem is sometimes an overused word, but, with the wallet and the simplicity of the UX around that, that's something which I guess is designed to appeal to that kind of mass retail market. But you've got the OTC desk, you've got the LP services, that's something sounds like is more institutional. So you are covering all those bases, and you're making sure you have products that appeal to both of those sides of the market.
That's exactly right. So all of the services that we provide, we also expose in an API layer to business partner and channel partners. So compliance as a service, tokenization as a service, payments as a service, and so on. We believe that in order to create an ecosystem that has that full gamut of liquidity that really attracts both institutional and retail players, that you need to have different products and services that can do that. So for example, our custodian can onboard an individual, or it can onboard a very large institutional or an endowment fund or a hedge fund. And all that really means is that we're bringing assets into the ecosystem. And so our biggest goal is to create an ecosystem that allows for digital everything. So we want to go out and speak to hedge funds or endowment funds and say, hey, you have this massive collection of real estate, this massive collection of collectibles. Come and custody those with us. We are fully licensed and legal to custody those in the traditional way. But hey, we have a tokenization platform. We can take those assets, we can tokenize them, and then we can then put them out onto a marketplace, into the exchange, or push them out through the markets businesses to a large group of retail customers. And then when you go back to the analogy of the pyramid where the smart wallet is on top, obfuscating all of the complexity, you now have the ability for a retail user, and it doesn't have to be just a retail user. There's nothing stopping a small to medium-sized business from taking the Fabriik smart wallet and using that as a core business wallet and paying their employees and transferring things through there, buying their assets. We talk about Tesla and other big companies putting, cryptocurrency on their balance sheets. Why should that be? And this goes to the ethos of our business. Why should that be exclusive to them? If I'm running for example, at my law firm, why wouldn't we take 10%, 20% of the capital that we have in our business and be able to invest some of that through, say, the Fabriik smart wallet in a licensed and legal way, so that we have exposure to those markets as well. Like these are treasury management techniques that should be utilized by many, even individual.
Yeah. Well, it definitely feels like we're getting to that inflection point where that is going to become relevant to all of these different companies and individuals and service providers as well. It's going to be very fascinating to see how you roll out from here. So we'll certainly be keeping a close eye and wish you luck. Before we wrap up, a lot's gone on in the last year. Things have been moving forward. If we look back to the 2017 hype cycle, where I guess, there was good projects emerged from that, but there was a hell of a lot of noise and maybe some more questionable products or projects. There definitely seems to be a lot more legitimacy about new things coming to market now, and it's all, we have way more building blocks, and people have way more building blocks to utilize to build their own platforms on as well, which is all fascinating. What's as a technologist yourself, what have you got your eye on? What's exciting you the most that you think is going to be critical for the further evolution of the industry as a whole, and perhaps for Fabriik as well going forward?
Sure. I really think that, and I mentioned it a bit before, it really comes down to this notion of tokenized real world assets and tokenized securities, the ability for the industry to move to a place where almost every asset on the planet is associated or is linked to a digital circuitry, we'll say, or a digital token or component. Because as soon as you do that, the fungibility, the transferability, the movement of all of those assets becomes completely seamless, and you can do some pretty amazing things. And those amazing things will be, for example, instead of me going to a bank to get a mortgage for my property, why can't I, for example, take a mortgage from a collective group of individuals that live within 25 kilometers of my home? Why can't I take advantage of the aggregation of financial products and services that are typically being done by an intermediary, while still having intermediaries involved for security and insurance and protection? Well, why can't I do that in a much simpler way? So I guess the reality is that I think you'll see over the course of the next 3 to 5 years, this massive unlocking of assets that people don't even know exist, that are locked tightly in 15-year real estate trusts, that are locked in some country here or some country there. You're going to unlock all of those. And I think that people will transact in the asset space or the financial services space the same way that people are communicating. When people think about communications now, it doesn't matter where you are in the world. I don't think twice. But when I was younger, to get a calling card, to get long distance, to pay, it was so complicated. And I feel like we're 30 years ago, as far as the asset space goes, we're where comms were 30 years ago. And I think that we're going to see a much quicker adoption, but that's going to be the feeling of financial services will be like we have communications today.
Yeah, well, it's an exciting and brave new world. So I think we're all looking forward to see how that pans out. Roy, it's been fascinating speaking to you today. Thank you so much for joining us and telling us all about Fabriik. And we look forward, as I said, to see how things pan out. If people want to find out more, where do they go, and what's top of your to-do list over the next couple of months?
Sure. So to find out more, come to fabriik.com. Come see us, see what we're doing there. You can catch us on Twitter or LinkedIn. On Twitter, it's Fabriik_markets. We're happy to chat with you. We have a chat on our website. We are open, transparent. We love to chat with people, so happy to do all that fun stuff. Coming up, you'll see me at some conferences, different conferences in Switzerland and in the Middle East and other places, talking a little bit more about what Fabriik's doing and where we're going. Right now on the plate, really the biggest focus for us is getting the exchange to market and getting that up and running properly. We've transitioned from heads down, quiet development into push and go to market. So I think you'll see Fabriik making a lot more noise over the course of the next couple of quarters. And on that note, I guess, Paul, thank you so much. It's been a lot of fun chatting with you, and thanks for giving me the opportunity to share.
No, absolutely. You're very welcome. Thanks, Roy.
Cheers.